Scott Redler of T3Live.com.
Scott Redler joins us.
Talk technical. Scott Redler's with us.
Is Scott Redler, Chief Strategic Officer at T3Live.com.
Had a rough ride so far in 2008.
I used to rule the world. Seas had rise when I gave the word. Now in the morning I sleep alone. Sweep the streets I used to own.
By no means did we hit a bottom. That type of bottom is going to happen at that 11,600 level probably within the next few weeks.
Scott, interesting. I know you were here a few weeks ago, and you said 11,600 is where to buy.
Yes, I did.
Happened to be right after that. Market fell 11,600.
People worried about the gas prices and food prices. We're in an unhealthy market. By no means, again, are we at a trading bottom. Right now, this environment's tough. Okay, the consumer's strangled. They're watching their housing prices go lower. They're watching their 401ks get diminished. They're spending higher prices on everything in their lives. So we're in a bad environment. And typically in environments like this, markets need to end in a dramatic way, I'm sorry to say. But I'm not sure that that July 15th low is the ultimate low of this big bear market we're involved in right now. I think ultimately we can go down to about 9,800 on the Dow. Maybe I think it could all be over with. It was a little orchestrated. It seemed a little orderly. Technicians don't like that. They like the market to solve its own problems.
Can we go below 10,000 on the Dow?
Yes, we can.
That would be 2004 levels.
Yes, it will. But look at the environment we're in. Housing prices still haven't hit a bottom. Oil, we're not sure if this pull-in goes lower or if it's just a pull-in and we can go higher. So there's still some question marks out there that need to be answered before we could say, you know what, or responsibly say that that was the bottom. And right now we're not getting much good news out there as far as the credit crunch and as far as the overseas markets. Right now, I think the market's in a tough scenario because people are saying we're probably going to test the lows for mid-July, and I believe that. I'm an American. I don't like when people are in pain. You know what? People should start taking accountability for their actions.
1,200 was the July low intraday on the S&P. Will we retest that low?
The probabilities say we should. We think that potentially we're going to retrace over 50% and we're going to go back to those lows. And if we break those lows, we're in for that volatile 6 to 8 week period where all excess is going to be squeezed out of the market. You're going to see poorly run hedge funds probably explode. We're going to get that last move lower. And at this point, there's still a lot of unknowns out there. And I don't really think that that low might be sufficient enough to solve, what technicians want to see as far as the fear, the capitulation.
Right.
We don't know if there's another brokerage firm that might go under. There are a lot of unknowns. So right now, that's why you need to watch the price levels and have gauges to trade against so you don't get in harm's way.
About 25%.
Well, we're not going to be perfect.
So you're saying we're going down to at least 11.6,
Yes.
and then you start looking for a bottom.
Then-
Oh, Dr. Doom, holy cow.
I'm a little surprised you don't think that there's a bottom as a technician.
Start getting ready to look for buying opportunities. I've been bearish all year. I've said the VIX hasn't been in areas, there hasn't been enough fear, the type of economic landscape we've been in. And at this time, we're starting to look for major opportunities for long-term investors. Well, only those prepared that follow a good set of rules will be able to take advantage of probably the next best buying opportunity of the decade.
This word, but that was when I